Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus is on the moving average trading and looking at the Forex market and some other instruments, in fact. So let's dive into the live charts in just a second, though. Before we do that, be aware of this disclaimer explaining the fact that this webinar is intended for a global audience. It may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and other conditions and details. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right. So we're going to take a look at the charts, of course. Excuse me. In just a second, but before we do that, just a couple of organizational messages, amongst others, the risk disclaimer, the risk calendar we'll take a look at in a second, but also I wanted to make you aware of the fact that the MT4 Supreme Edition from Admiral Markets has more features. They used to have 56, now they're about 60 plus, with some extra things that have been added. So if you're using it, you can download the new version at admiralmarkets.com, and you'll be able to access those new features. And there are a lot of cool things that have been added as well to the new style, such as, for instance, a very useful historical indicator, and so you can see the old trades or your past trades very visually very easy on the chart, for instance. So those are all things that are pretty cool. Also, standard standard indicators have been added, which are very useful, like the pivot point and the Renko. So those are all cool things. Take a look at that. And let's move on to the calendar now. We have pound inflation rate and euro news. And later today, dollar inflation rate. And tomorrow we have FOMC statement, and we'll know if the rate has gone up or is staying the same. All right. Another thing you want to take a look at, perhaps before trading is or after trading, is our blog at Admiral Markets. We started recently, and Nennet, for instance, wrote on Sunday about 7 awesome trading movies you need to see. So if you're, in the mood for a movie and you would like to see something that's connected to trading, Nennet has 7 suggestions you can find. Just need to go to Analytics and Traders blog. You can also take a look at the heat map to see what kind of volatility and big movers there are to be found in stock market as well as the Forex market. Here, the Forex market, pound New Zealand, pound odd, big movers, as you can see, a lot of volatility, a lot of movement. The more movement, the lower or higher, and the more volatility, the more to the right the pairs will be. After that, there's a big gap, but pound yen, pound CAD, as always, pound is dominating here, but close to that is a couple of euro pairs. Dollar is very quiet, as you can see. And that could definitely be because of the news event tomorrow. Not many traders and not many banks maybe are interested in moving this and trading this particular currency. So a bit of caution perhaps with the dollar before tomorrow's event. All right. So from that point of view, maybe looking at these crosses like euro yen, euro odd, for instance, pound odd could be good. But let's start with the euro dollar first of all. All right, euro dollar is pushing up, as we were saying last week, from the 38.2 fib, and was waiting for that 38.2 fib last week, up down in here somewhere, right? And was looking for a place to take a long after the break of this trend line. So at that point on Wednesday, I said move to break even, and let's see if it can manage to push through and break above this trend line, and it did. That was Wednesday. Price indeed slowly started to move to the upside. Didn't make a pullback, didn't hit the trail stop because I said I would move it to to break even, remember, and eventually broke through the red line to accelerate for one more push up. So that's sometimes how price can start corrective and then accelerate to the upside or downside, accelerate above the resistance here, above the channel, in fact, for more gain to the upside, right? This is the channel, and it broke and moved to the upside. Now, it didn't hit the 111 as I was hoping for, but it did make a pretty nice momentum. Now, if you use my time factor rule, then of course you can get out around here. 5 to 6 candles not breaking this top is a signal of weakness. So in case you're not know or don't are not aware of that rule, just let me know, and I'll explain that in a bit more detail later on. But that was the breakout last week. That was a good breakout off the bounce of 38.2 fib. Now what happened after that? Price basically not going anywhere, making a retracement, making a bounce, making a retracement, making a bounce. So making kind of a wedge within this uptrend at the moment on the hourly chart, and at the moment trying to push above that uptrend, as you can see, bullish candles. Right, so kind of a bit of a wedge here, and more or less breaking through this wedge. But there's one thing I don't really particularly like about this break to the upside, is that I don't think it has a lot of space potential, and therefore I'm not really interested in it all too much. Let's see, if we put a fib like this, for instance, you can see the 61.8 fib, I think, is a very important resistance. You can see also resistance on the left, which are past bottoms that could act as resistance. So with high level resistances like that nearby, I'm not that interested, to be honest. The break last week was good and worked out fine. The bounce off the 38.2 fib worked fine. This fib, but at the moment I don't see much space until we bump into first of all the target, then the 61.8 fib, and then that red trend line. Now, if we zoom into very low time frames, like 15 chart, for instance, there could be a bit more space because then we can see that there's about 70 pips still up to that level. So might be still okay for a lower time frame for intraday trading, but for a position trade, it's definitely not enough. But maybe on a 5-minute chart, 50-minute chart, a small pullback like this for one more bounce up is possible. So that's something maybe to keep an eye on today as well. I mean, it is, despite the choppiness, it is moving nicely to the upside. So it's something that might still be okay. But I would like to see probably a pullback to, let's see, let me look at the hourly. I think waiting for this hourly candle to close, and we shouldn't expect to break below that candle, and waiting for retracement about halfway or to the 38.2 fib and a bounce, that could be okay. Yeah, that seems to be fine to me. Let me just check something here. Got pivot points at around the R3 is 111.25, so that's really the max indeed. That is equal to what we expected already as a resistance spot. 50-minute chart is everything is aligned with regard to the moving averages. As you can see here, very good space in between it, so we're getting acceleration of the upside because of course our focus today is moving averages, and we can use moving averages in many ways. I'll dive into that a bit later. Very well, of course, for trend definition. I'll show you some examples why it's so good for trends. But first of all, I think that try to see what kind of pullback would make sense. Yeah, I think that that makes the most sense. I don't expect a very deep pullback here personally. So I don't think, I mean, I don't think I will wait for a deep pullback like this. It would be probably too much, I think. Right? So a bit lighter pullback and then a bounce again like this, for instance, right in here could be the continuation. I think that's what I'll be looking for. So I'll wait for this hourly candle to finish. And let's see if it, first of all, finishes bullish with a close near the high. If it does, then any type of pullback to one of these fibs and then a bounce up again could be it. I'll be looking for on a lower time frame, 15, 5-minute chart, looking 15-minute chart maybe better, looking for a bit of a retrace and bounce. All right, pound USD. All right, pound USD, as we said last week, 78.6 fib could be the bouncing spot, and there's a lower and lower chance that it will retrace deeper because it's already retraced that deep. That's indeed what happened. It didn't retrace lower. 78.6 ended up being the bounce. It broke above this resistance trend line, and I was waiting for a bit of a hook back on the hourly chart, which really didn't happen. It just kept breaking and breaking. So, that the analysis was right here, but didn't get the hook back or pullback sufficiently for an entry in my case. But that can happen sometimes if you're waiting for a pullback. But this one went broke and it didn't stop, and ultimately went to the minus 272 target, which is the main target after bouncing at the 78.6 fib. All right, so from that point of view, we kind of reached the target. Also, when you look at the daily chart, we're at the top quarter of a downtrend channel. And is there any divergence between these tops? 1 second. No, there's no divergence. But anyhow, it looks a bit corrective to me in a way. It looks like a rising, to some degree, a rising wedge, perhaps with a bit of creativity, like this. Or it could be a channel like this, of course, as well. In any case, at the moment, the 4-hour chart is indeed a bit bullish, but the daily is down, so they're not really aligned in this case. The 4-hour moving averages are flat, which is showing indecision. The daily is down, but the 4-hour is very indecisive. The hourly is bullish. So there's a lot of mixture here from that point of view, and not really interested in trading at either side. To the upside, we're going against the daily trend, and there's clear, I would say, a resistance level up in here. So a break of that resistance, a break of 152.50 and 30, could see a small move up to this, but I'm not really interested in that either because of the bigger downtrend channel there. So upside, I'm not interested. Downside, the 4-hour is up, and the 4-hour is indecisive, and the hourly is up. That also, I think, is at this moment not a great combination, unless price maybe breaks through these bottoms, breaks through it with a good candle close, a good candle below it, hooks back to probably the same level. There could be a good continuation perhaps on the pound USD. But I'm not. I'm going to skip this one. I'm not really. I think it's too rangy. It's too corrective. I think there are probably better pairs that are trending a bit more. Even the euro I like more than the pound. So I'm going to just throw out the pound off my list today. I'll be just very simple and make it very clear. I'll just cross it out for today. Dollar yen is well, it's in a downtrend obviously after breaking this consolidation to the downside. Broke, hooked back, continued. Now it's facing a daily support trend line though, and actually a weekly one as well. If we zoom out all the way to the weekly, you can see that that's a pretty massive trend line there. A pretty important one because if that trend line breaks, there could be a bigger correction going on, and we could see a follow through of this initial fall all the way from the summer and still see that downside continuation. So that's an important level, but we haven't broken yet. The price is right at it. So from my perspective, it's a bit of a cautionary spot. And for bulls, we got a bottom in here too. So I think that if anything, this can cause a bounce at the moment more than anything, right? A bounce like this, back to resistance, and that could maybe turn it around again. For instance, that could be an important zone, just like this is an important zone. Two important resistance spots where I have the red lines. All right, so that's something to be aware of as a bear. Also, if it does break through the green lines, that could be a bearish breakout as well. And breakouts, of course, don't have to necessarily be very smooth. It could break, pull back, and then fall. So this one is I would say not an easy pair either. I like the euro again a bit more. There could be potential inverted head and shoulders here. But ultimately, if I look at the hourly chart, I don't really see something very interesting to trade. 1 hour is down, and at the moment, if anything, price is at support, and I would expect a bounce. So either I would like to trade a counter trend, which doesn't appeal to me that much at the moment, or I trade it with the trend, but then I'm slamming into that support. So again, something I'll probably cross off the list for the moment. Odd USD, let's see if that's a bit better. Well, it doesn't. Daily chart is in a range, right? But that doesn't have to be bad necessarily. 4 hour chart, quite choppy upside so far. Price bouncing off support. And last week we were talking about the bounce and support potential. It did finally happen. Took a bit longer though. And then also the potential to bump into resistance to make kind of a head and shoulders. That also happened. Fell again. And then it's getting a bit choppy because it bounced yet again. And now it's kind of staying in a wedge like this. And with the hourly chart showing flat moving averages, I don't think that this one is particularly interesting either, to be honest. Now, from a long-term perspective, the daily, if it breaks below the lowest trend line, could see with the trend a continuation here. If it breaks above this double top, then there could be a bigger correction up to the trend line resistance. But on the hourly, it does not. I would like to see a bit of a trend here on the hourly. I think, especially intraday, the hourly, to see a good hourly momentum is nice to have as a support. He will probably be not much different. Let's see, there is a bit of a break to the upside here. But these dollar pairs are not really very exciting at the moment, as you can see. All right, so we got, it's a bit different because we do see a bit of a break here above the top. And when that happens, of course, there could be space to the target, the minus 272 target. So the Kiwi, I think, if anything, looks a bit more interesting than the Aussie, the pound, the dollar yen. Got a deep 78.65 bounce. A spike towards it. We're looking already here at the support level, but that didn't hold. It made a spike and then flew up pretty fast during the news event right there. All right, so target, minus 272 target is the main one. Let's take a look a bit at some various time frames here to get a feel. All right, yeah, this was, remember this was the impulse and the correction for a potential zigzag 1, 2, 3 or ABC, doesn't matter how you call it. The trend line break happened here of that zigzag, and it'll kind of make a break, pull back, looks like a continue. So this has more potential, I think. Now there is a bit of a lingering divergence between these tops. So from that perspective, I'm not interested in going long right now, but would like to see a bit of a pullback. Target is not too far either. Let's see, about 50 pips left. 50-minute chart has a bit of a divergence as well. So I think for price to go back to the long-term moving average on the 50-minute chart is good. For those that maybe are joining relatively less often, I use moving averages for various things, among others defining the trend. But secondly, also for support or resistance. And thirdly, as a target or as a method of understanding divergence. If there's divergence on one time frame, then the rule is that price should go back on average quite often to the long-term moving average, which is 144 EMA close in my strategy, in my analysis. So that's the rule of thumb. Once price has reached the 144, that divergence is not valid, is not really has no impact, has no relevance for the analysis anymore. That is particularly true for 4 hour and higher. On an hourly chart, it's already the percentage is already less so. There's I would one divergence is still good, but double divergence is a bit better for that rule of thumb to work. When we go below the hourly, I would say almost double divergence is a must to use that rule. A single divergence on the 50-minute chart is really not enough to expect necessarily a pullback to the moving averages. We are on a 50-minute chart and we only have a single divergence. So that in itself is not enough to must expect a move back to moving average. It still could happen. It doesn't mean that it never will happen, but it's not as strong as a higher time frame. So this is the case. We only have a single. But considering the target, of course, there could be other factors to consider. And considering the target that is so close by, I do think that waiting for a pullback here makes sense. And otherwise, I'll just skip it. All right, so this looks like a good trend. And well, what kind of pullback? I mean, it would be nice to see, for instance, something like this. That's a neat one. And you can see that the moving averages are nicely aligned. And you can use moving averages not only in trend definition, but even looking for pullbacks and continuations. When, for instance, well, I'm not sure if this is the best example because it was actually a double top. But I just wanted to show you what kind of price action I would like to see here. Kind of a small little bull flag. It doesn't even have to retrace all the way to this green line, by the way. The moment it shows a candle like this, and the oscillator has gone back to the zero line, something like this here, and then we see a bullish candle like this right here, then I think that is a very decent long at around, well, whatever it could be, 67, 90, for instance, and about a 70 target in that example. I could be totally wrong and we never get the pullback and it just continues to the target. That could happen. Let me take a look at the 4 hour candle to see how that looks like. All right. Yeah, probably won't get that deep 50 fib here, maybe. Just trying to see what kind of retracement could be more doable. Yeah, I would say probably around 67, 75 would maybe be possible, but not more than that probably. We got these tops in here. We have some fibs there. These tops, bullish candles that probably will get support and not see a very big retracement here. Bullish moving averages. So if price maybe makes a correction once again, like something like this, then that would be my territory for looking for a long. Something like along the line of like a candle like this after a correction like this. That's a good example. Pullback, continuation. And you see the oscillator as well, nicely indicating the retracement. All right. Dollar CAD. Got a lot of dollar pairs. We'll take a look at non-dollar pairs in just a second. This is pretty choppy right in here. Let me use a different template. 1 second. All right, here there are a bit more moving averages than normal than in the other templates, but it helps sometimes to see the trend on the 21 EMA band, which is high, low, and close a bit better. Obviously, very good trends on the 4-hour and daily. But not on the hourly. There's divergence on the hourly. Price is below the 21 EMA band. So I would have to see price, for upside trade, would have to see price break above the 21 EMA band and probably make a double hook back to it and then bounce again. So that's not interesting right now. Maybe later on. Alrighty. Now, let's take a look at some of these crosses. The euro odd and the pound odd are in a bit of an interesting spot. I think they could see some bullish bounces, but they are a bit tricky because they have made also strong downsides. So as you can see here, there's been a very strong upside here, but also a pretty sturdy correction, and now price is bouncing back and at resistance. So there's a lot of kind of various angles one can look at this. Looking at those moving averages, it looks pretty flat and intertwined. So it's yeah, there is a bit of it could be tradable, but it's something to be still a bit cautious of. Now, a break of this could usher in a bigger correction. A break of this could send it back into the uptrend, although be careful of this resistance right in here. These tops like that. So on the 4-hour chart, it's the same thing. Yeah, from that point of view, it's a bit best. Your odd is maybe perhaps a bit better. Let's take a look. Your odd has a good weekly candle. So a small retracement, like the 38 or 50 fib, could send it back up. So I like this a bit more than the pound odd. The bottom of this channel, pin bar, bullish candle, and one more bullish candle could be possible to hit that target and then maybe turn around again. So let's take a look at the 4-hour. All right. There was divergence, but price went back to the long-term moving average, as you can see. So this looks like it's close to trending. Now this retracement here could have been it actually for this week, and price could be an upside from now on. You can see that the retracement 21 EMA stayed green, stayed bullish, price bouncing off of it, using it as support. As I said, one of the things I use moving averages for is support and resistance. So you can see it's being used. There are a lot of things to see a bullish continuation here on the Eurod. From that point of view, sorry. From that point of view, a bullish continuation I think looks good. I think this is a bit early still. I'd like to see the 8 EMA above it. Something like, for instance, here. As you can see, like this, we get a push above it, a bit of a pullback, and then a strong bar above it. So it doesn't have to be exactly like this. Let's take a look at another example. Here, for instance, a push above it, a small little bull flag, and then the continuation. That's another example. Something like that. Or it could also be, let's see. It could also be something like this, a correction like here, and then a bounce. Something like that. So what I would like to see is either now a bull flag like this, and then a bar closing above it. A small little pullback followed by a strong candle. Or if it does move up higher, basically the second bounce. All in all, looking for a continuation. So this could be on the radar list. Let's see if there's anything else. Yeah, it was last week was saying that a continuation here might occur. It didn't really occur, and ultimately failed. Probably resistance too close by. And I don't like this euro yen that much this week either. Downtrend, but a lot of momentum here. Pound yen also pretty choppy. Sorry, there are a lot of things going on here. Let me simplify it. Well, same thing. I'm really not that interested in trading it to the up or downside here. Up, it could bounce as a weakness, and short, I'm not that in, but you know, it is a downtrend. But short, it's a downtrend, but ultimately, I think not really much space to the downside. Kind of in this range, and the price is relatively at the bottom. So also, this pound yen doesn't really appeal to me. So there are a lot of pairs that are really not that interesting for me. As you can see, the ones that are most interesting to me is the euro odd, Kiwi, and euro dollar. I guess those three I would say have the best papers for today. All right. Let's see. Pierre, hi. Good to see you, Pierre. It was a long time ago. Hope you're doing well. And is asking, could it be useful to place a horizontal line at the 4-hour time frame, moving averages, and then using those lines as support or resistance with taking trades at 1 hour or lower? Yeah, definitely. I in the past did that quite regularly. And would indicate like, okay, here's the 4-hour long term, here's the 4-hour like short term, and then go down to the hourly, so you have an idea where those lines are. But often enough, they'll be. Let me use a different template here. All right. Often the 4-hour band is going to be equal to the 1-hour tunnel here. Let's take a look. Let me put lines there. Not totally, but that's what I use as a rule of thumb. But it's not very precise. Maybe the bottom one. Let's take a look at that. Yeah, more the bottom of the band is roughly equal to the 1-hour tunnel. Here you can see on the daily chart, for instance, here's the bottom of the band and the 4-hour chart with the tunnel quite close by. So that could also be a solution. All right. Let's see. Your dollar making a bit of a pullback now. So pretty strong pullback at the moment. Let's see. I'm not jumping in along now. I'm looking for a bit of a reaction as a bounce, first of all. Let's see how far it could go. I would expect a bounce, but would rather wait for a signal of that. Because there's also a very choppy looking upside, right? This entire structure is not fantastic either. So just because the other pairs are not that interesting doesn't mean that the euro dollar is fantastic either. It's just the only one that has a bit of potential, I would say, and has a bit of trend and momentum to it. Especially here and here. So we can keep an eye on this chart and see if it makes somewhere in here a bit of a pullback. And it could be all the way even up down to here. It doesn't have to be within these levels. It could be deeper as well. I wouldn't like to see. I mean, if price breaks through this bottom, then it's a bit of a different story. All right, Kiwi. Let's see if we get the bigger correction. I would like to see it. I lost my green lines. I think they were somewhere in here, right? That's what I was having on the chart as a potential retracement area right in there. So price would, for that to happen, price would have to do this. Let's see if that happens. And the last one was euro odd, and I would like to see a correction either now or a bit later, and then the continuation. So there's not a lot to keep an eye on at the moment. Maybe that will change throughout the day, but at the moment it's not a lot of things on in vision at the moment, let's say. But that's maybe not that very surprising. It is mid-December with FMOC, and to a certain way, quite a historical moment, I would say, tomorrow. In a certain way, historical because either they're going to increase it, which they were saying they would in 2015, or it's finally pushed towards the next year. So it's going to be interesting in any case, and there could be quite a lot of volatility. So be careful of that. And that's tomorrow evening, European time evening. So from that point of view, not very surprising maybe that the market, the dollar perhaps is on the quieter side. But there was a lot of volatility as we can see in the market heat maps with the pound pairs. So maybe pound New Zealand and euro New Zealand are worth taking a look at. All right, so let me talk a bit about these moving averages as well. 21 EMA and 144 EMA. Obviously, like a 4-hour chart, for instance, what I use it for, they obviously give the intention of a trend when the 21 is below the 144 downtrend, when the 21 is above the 144, it's an uptrend. If they are all crossed and intertwined, it's a range. So if they're crossing, there could be a trend change like this, for instance. So those are the kind of things we can use for pretty intuitively, and we can read the market pretty easily like that. Right? So we see that price on a 4-hour chart is in a downtrend. Price is below 21, 21 is below 144. So from that point of view, they simplify the charts, make it easier to read. So 4 hours in a downtrend, easily, right? And we can take a look at now at the hourly to see if there are any opportunities. Preferably what I would like to see is that if 4 hours in a downtrend, that well, depends on what time frame I'm looking for. If I'm looking to trade it as a swing trade, right, prices retracing back, for instance, like this, that would be great. Back to the moving averages, that could be a great trade. If I'm looking to intraday trade it, then it would be good if this is in a downtrend too, for instance. Not both have to be in a downtrend, but if they are, obviously it's very strong. Now, if we're lucky enough to have a couple of those in the market, then that's great. Sometimes the market is not going to be that neat, and there could be only one of the two time frames trending, and have to survive with that. But if there are any pairs that have both, obviously that's great. So depending on what time frame one enters on a 15 or hourly chart, basically the main idea with moving averages is to see a trend, wait for a pullback, and look for the first sign of a continuation, basically. And if you do that consistently, that should be a great way to tackle the markets. All right. So if you just consistently implement this, then you're on a very good track because ultimately this is buying or selling at discounts. And because the trend is present and there's hopefully momentum, there's a good chance the price will continue. All right. This is basically when Nenad and I are trading. We're doing this. This is both of us. This is our main focus. This is our main edge. This is what we like to trade the most. This is what works the best for us. And another time I use a bit different tools for that, but ultimately the philosophy is the same. And when Nenad, I don't know if you know, but Nenad and I are trading at. I have a website, elitecurrency.com, and we have information and free materials, and occasionally also content, educational content, and Nenad likes to record his trades on Harp. It's a system called Harp. And what you'll see if you look at his videos is that there is always about a trend, pullback, and he's looking for the continuation. And he uses the HARP system, which is a range bar system for that. So basically, if you can use these same moving averages for that same principle. He uses different materials, different indicators for HARP, which is great. But you can use moving averages and get a similar feel. For instance, by using this 21 EMA and the 144 EMA for that decision. So for instance, on the hourly chart, we see that price is trending. On a 50-minute chart, all right, we see price pulling back to the moving averages. So as soon as the pullback is showing a sign of continuation, then that is the signal for a short. Now, what would be that signal? And that, of course, is the continuation. I like to use price action, fibs, breaks. So in this case, of course, it's retrospect, but it's always, it's still useful to learn sometimes from that. Is that the break here, the second candle here could have been a break, or the third candle here is a break below the moving averages. Those are breakout candles in this case. Those are continuation candles. I often notice that two candles after the pullback, two candles in a row is often a good signal of continuation. Here you have one, here you have one, here you have one. But it's still that pullback. It's all part of that pullback. So when you get two, which is here, it's often a good signal. Or to break below the moving averages. And either one of the two move down a lot. Right? But this is pound New Zealand, so obviously the numbers are a bit skewed because it's such a big volatility. You're going to see big numbers on average. Now, even this small pullback here could have been a pullback, but I'm not sure if I would have traded with price right at the bottom here. Double bottom, perhaps. Those are things I would look at. Filters, and look for breaks that and continuations that have the highest probability. Now, on a 4-hour chart, that's a 50-minute example. On a 4-hour chart, we can see the price is already trending for longer, right? The price is already trending since here. Why? Because the space between these moving averages is increasing. As long as price stays below it, and the 21 is pointed down, we're in a downtrend. So that happened again. At the very minimum here, right? The price was below it again. Even here, the moving average started to turn. But okay, let's say here, that's most conservative. So from here, the trend is down. So what we're looking for is the pullback on the hourly. If that was a 50-minute example, this would be an hourly example. We see the pullback to the moving averages, and the continuation would be this more or less engulfing bearish twin. So a short right at that candle close, or a candle retracement of that to the 38.2 fib, for instance, here could have been a short. Stop loss above the candle, and now hitting the Fibonacci targets. So those are ways to use moving averages for trends, pullbacks in a way, and then the continuation using other things like price action. Let's see if we can find one more example. Let's take a look at this Kiwi now from a different perspective with this in mind. So Kiwi has been trending from this candle onwards, right? It's been an uptrend already before that, but I don't want to go into all the trend details here. Let's just focus on the recent part. All right, so trending from this point trending from this point, making a pullback, and then the continuation right in here. Now this candle is not really maybe a great signal, but the 8 EMA did turn up, I think. No, it stayed flat. Okay. So this is maybe not the best of signal. But the next one here, good price action signal. The 8 EMA is pointed up. So this could have been an entry right on that one as a break pullback continue. So this swing trade in a way is already occurring. And then it released a video where he took a Kiwi. I think it was a Kiwi. Let me double check now. I don't want to say something. I'd rather check it. No, it was not a Kiwi. It was a New Zealand yen. Sorry. It was a New Zealand, but I mixed it up. So it was a New Zealand yen he took where he took 20 pips. But yeah, you can see easily also the same could have happened with a Kiwi dollar, moving up some 44 pips so far. And that's a swing trade on the hourly. Now, that's why I was looking at a 50-minute chart, because I'm looking for a bit of a pullback before expecting that follow through. A pullback basically to the same moving averages. And that might not happen. That's why I said it might not happen, because this is already in a continuation and it could just continue. And in that case, it's just unlucky. I would like to see a bit of a pullback here before jumping in, because the target is not that far. So let's take a look at one more example. Do you have a particular time pair in mind? Do you have any wish list there to look at the trend? Maybe this pound on New Zealand. You can clearly see there have been moments of trends, of course, on this 4-hour chart. I like the 4-hour chart here for trend. Right, it's very clear, clean, neat. Gives good info. I like that one the most. It's most flexible. So it was trending here already. And when it breaks below it, right, when it makes a pullback and continues, so let's zoom in a bit. What could have been continuation moments? And the continuation strategy could, for instance, be, as I said, 2 bearish candles, which is here, a break below, which is here, or here, a second break. It could be even the second continuation, a break, pullback, and continue, even on the lower time frame, which would be more somewhere around here, perhaps. A trendline break only occurs here. That would be this candle. So that's using typically one time frame for trend, then a one lower time frame for pullback and continue. Here there was a continuation as well. We have the red arrow. So those are all potential continuation trades on the odd New Zealand, right? Clear trend on the odd New Zealand. Even on a 15-minute chart, we can take a look. There was a trend on the hourly, so on a 15-minute chart, the same principle could be used. Whereas the hourly trend, it's here. There's an hourly trend. No, this is 50-minute chart. Sorry, the hourly trend was the same spot, I think. So we're looking for continuation. Wait, let me just double check. The hourly was trending below this one. The CCI. Okay, thanks, Michael. We'll take a look at the CCI and the Kiwi in a second. So trend, looking for a pullback and continuation. Here the hourly is trending, right? So looking for a pullback and continuation, which happens here. So that would be the break pullback continuation. Now, the continuation didn't go very smoothly. It went a bit and sideways, but ultimately did fall. And another one here. And perhaps another one. Now, of course, you want to be, in general, careful with taking too many of these smaller pullbacks on the 50-minute chart because they're more vulnerable to getting a bigger correction at one point. But I hope the principle is clear. And you can use that philosophy, I think, as long as you can identify the trend nicely and understand what, when the momentum is really going well. I think that this will, on average, be give many good winners. So with the Kiwi, sometimes patience is a bit required. That's the disadvantage of it, because sometimes there's just going to be moments where there is no pullback, where price is continuing, we're not in a trend yet, and that could be a bit frustrating to wait for that. All right, divergence on the 4-hour chart on the CCI. Let's take a look. Now the CCI I don't have on it, but I believe that I believe you, Michael. I don't have to check that. I believe that there is divergence on a oscillator, awesome oscillator. This is still in a momentum. It's still building. It's still green. So because there is no top as yet, there's no confirmation of that as yet on the 4-hour chart of when I'm looking at the awesome oscillator. Let's take a look at the hourly. On the hourly, there is divergence indeed, but this one is still building as well, actually. So hasn't made a hump yet. So from my perspective, it's not something that is very dangerous at the moment. I don't think that there could be a small pullback that would be great for me. Otherwise, I think it should be still fine to get up to that bigger target at 68.60. But of course, if you think that there's divergence, when you use your own methods for that, and you use CCI more often, I would definitely just stick to that and skip this Kiwi, right? Obviously, Michael, definitely. If you think that this divergence is going to be impact the currency, obviously it's easy just to skip this one. And I would definitely just follow your own analysis and trade plan from that point of view. All right, but from my perspective, when I look at divergences, it's still okay-ish for the next target to be hit. But everyone has their own way of divergence viewing. In general, looking at the AO at least, there's one thing I have to warn you about is that if price does break a high and this is still building, that in itself with the AO is not a divergence. What has to happen is basically you need to have 3 opposite bars so that the hump is finished, considered finished, and then there could be potential divergence present. Let me say that. Alrighty. Let's see. I think that's it. Any questions regarding any currency pairs, other currency pairs, any trades you're in, any setups you might want to show, any other pairs you want to take a look at, anything regarding the moving averages or content that I just mentioned you want to ask. But if there is divergence on a particular time frame, then be careful. Then in that case, the break pullback continuation philosophy is in danger, right? If there is divergence, it's warning us that there could be a bigger correction. So in that case, price might not do this, continue pullback, a break, continue pullback, but it might do this with divergence. That there's a higher chance that it will do this and then correct lower before maybe still bouncing up. Depends, or maybe moving lower again. This is the trending situation we're looking for. This is the one that if you're trading with the trend, you want to avoid. Alrighty, but that's the schematic and good to know. That's why divergence is very important. So we avoid, kind of filter out those continuations that are prone to move less far and maybe fail. And now you can see also with that in mind, you can see why the 4 hour chart is not as interesting. Prices, look at the 4 hour chart. Prices right in the moving averages. Moving averages are on top of each other. The moving averages are flat, especially the 21 EMA. It's flat. 21 is all intertwined with the 144. So is that an interesting trend? No. There is no trend. It's a range at the moment. How about the dollar yen? Well, this is a trend from here onwards, right? The moving averages are aligned. From here onwards, prices below the moving averages. So yeah, this is in the downtrend. But the reason I didn't like it is, and that's why I keep an eye on the higher time frames too, for instance, and other time frames, is that there's a support level nearby. There is a trend line nearby, indicating to me that the 4 hour could be a downtrend, but there are higher time frame reasons to be cautious with trading it with the trend. So that's something, of course, an extra filter kind of layer that is useful sometimes. All right. Well, I don't see any questions, so allow me just 1 minute to show you the webinars of this week. We got strategy tomorrow. We got price action trading school with Nenet. He's going to take a look at MACD and stochastics tomorrow evening. Thursday at 5:45 GMT time, we're going to take a look at our predictions of a year ago and also make new forecasts for 2016. All right, so that's the lineup of this week. And next week we got a couple of more webinars. You can find those at education and webinars. And if you want to see the website of Nenet and myself, you can do that by going to elitecurrency.com. And if you sign up with us, we're going to give you, we have actually a nice promo going on where you sign up with us and Admiral Markets and you get a free trend course with moving averages that I just showed you. That's this elitecurrency.com. So if you're interested in that, you can find that here. The browser's not working at the moment, but I mean the website is working. It's just my internet's a bit slow with the webinar on. So take a look at that. Also webinars later this week. Wish you all good trading and don't forget the MT4 Supreme Edition, the new one you can find here, trading platforms, Supreme Edition at ammomarkets.com. And wish you good trading. Hope to see you tomorrow and see you all soon. Cheers.